Good morning, YouTube. It's another Wednesday for you. I got another video. I wanted to talk about how your mortgage rate really impacts your payments, or how your interest impacts your payments. But when I came to purchase a home, I didn't really understand what the interest rate was going to do, or how it would affect the payments. There's different interest rates, and then of course now this is something that's happening now. That's not something that was in the past. In the past it was like 17%, 18%, 19%. So the interest rates always change, but I want to show you how those things actually impact you when it comes to making your monthly mortgage. Okay, and just as a disclaimer, I am not a lender. I am not a financial advisor. This is just something that I did on my own research. I researched all of these items, and then I now present it to you just to have a quick understanding of what's going on with the mortgage, what's going on with the payments, and how it all breaks down. Okay, I want you guys to be able to see all of it. I want you to be able to, touch, feel, see, hear, whatever works best for you. I want you to be able to do that. So if you want to write these things down, amazing. But let me get into it. But I just had to make sure I put that disclaimer in. I am not a financial advisor. Okay, I'm just bringing you some research that I did myself, and I'm a realtor here in Phoenix, Arizona. So when it comes to real estate, I can do that for you. But when it comes to this stuff here, this is just stuff I looked up on my own, and then now I want to present it to you so you can have a better understanding of what's going on. Before we start, if you can hit the like button, subscribe if you haven't already, and share this with anybody that you think might benefit for something like this. Maybe it's something that they've never heard before. Maybe it's something you never heard before. Maybe you want to share it on your page of social media, or whatever the case may be. But let's get the word out there and then share it. All right, so let me give you a quick breakdown on how we're going to discuss this loan. I'll try to give easy numbers because I'm not the brightest person when it comes to finances. Just kidding. But I just want to have easy numbers to be able to break it down a lot easier. I don't want to make it difficult. I don't want to have it difficult for myself. I don't want to have it difficult for you. I just want to do easy, simple numbers. So let's look at the home value. So we're doing the value of a $200,000 home, okay? And then we're doing the typical down payment of $7,000 on a $200,000 home, which is a down payment of 3.5%. Okay, so the FHA conventional, there's a difference in there. You do pay 3% for one and 3.5% for another. But let's just say we're just doing it even across the board, 3.5%. Whether it's VA, conventional, FHA, it doesn't matter. USDA, any one of those. We're going to do the 3.5%. Okay. So now, because you put that $7,000 down, now you're going to actually come out with a loan of $193,000. Okay. That's going to be your final amount. That's what your mortgage is based on. So your mortgage is not based on the $200,000. It's based on the money that you put down. Now decreases it to a certain number. So it's 193 in this example. Okay. So that now is your loan amount. So now let's look at real quick, and I have this over here on the side. Hopefully you can see that, but I have the credit score ranges. This is just something I looked up. I'm not going to give you the site I looked it up on, but I looked it up on one of the banks that I use myself personally, but you can look it up anywhere, and whoever you go through is going to have the information that they present. I don't know if it's accurate or not, but this is what I see in a lot of different places. But a poor credit score is actually 620 and below. So yeah, that's going to just be the poor buying advantage, or your ability to get loans and things like that. It's going to be a little bit more difficult whenever it's on the poor side. So the fair side is 621. Buying power, that's the word I was looking for. Your buying power is pretty poor when it comes to a 620 and below. Your buying power when it comes to a fair score is going to be 621 to 699. So anything 699 to 621, Now you're looking at a fair score. For a good score, and this is actually really good when it comes to purchasing a home. So if you have a good score, it's 700 to a 759. A 759 to a 700 is actually really good. So you'll get some pretty good rates whenever your score is in between that right there. But to get the excellent, and I mean top-notch stuff, you want to be a 760 and above. That's the excellent score. When you have that excellent score, a lot of lenders are just rushing to you. As long as you have the finances, you have the score, that shows that you have good history in purchasing. That shows that you're responsible with your money and you've done all the things that you need to do in order to earn that score. Okay, that score is not going to just be paid for. You have to work to be able to get that. But those are just the credit scores, so you can actually look up your own credit score and see where you fall into, and then now start presenting it to the lenders that way. Say, hey, my credit score is around, you can say around 710. Can you run some numbers for me? Okay, and what if it's not 710? Then can we look at a 680? And then you can run numbers and you can see what you're gonna get. But I just wanted to do interest rates, and I wanted to present that so you can get an idea of what bracket you need to be in between. Okay, so when we're talking about the interest rates of today, these I looked up on a certain day. I looked it up yesterday, but it's not going to apply. So these are just numbers that I just pulled off of the computer, and the 4.25 is not on there. I just put that on there just so you guys can see if the interest rates start to increase, if they start to decrease, if whatever the case may be. I gave a good range. A 1 point difference is going to make a huge difference in your payments. So let's go ahead and talk about that. Your interest rate, the excellent score, we're going to say is going to get this right here. The good score is going to get this right here. The fair score is going to get this. The poor score, depending on what's going on, you might get this or a range in between this and maybe like a 5%. But let's go ahead and do these rates here just so you can get an understanding of what may be a possibility and then how big those changes are for you. All right, so on a $200,000, we're still going with the same thing, $200,000 loan, home value. We're putting $7,000 down, it's 3.5%. $193,000 loan amount is what we come out in the end. And this is after you do your closing costs, your down payment, your earnest, you pay your fees and things like that. Your fees for the lender, the title, those go into the closing. So I'll just say closing cost. All right, so now the blue side doesn't work, so I got to use the green. So now let's go ahead and look at mortgage. What would your mortgage be on something like this for 4.25? We're looking at a 1145 mortgage. So $1,145. All right. So on that, we have principal, we have interest. The principal and interest is going to be $949. Okay, let me erase these number signs so we can just see flat numbers, right? So it's $949. And then your homeowner's insurance. The homeowner's insurance is the same across the board, but I still got to put it on there. So it's $68. The property tax is the same across the board because the property tax goes based off of this. So now it's going to be property tax is $128. Make sure we put it in there. 1, 2, 8. All right, $128. And then if you have HOA fees, then you want to add those in there right here. Okay. The typical HOA fee here in Arizona is, in between $30 to $50. So let's just go ahead and put 40 in there. So we'll put $40 for the HOA fee. Okay, so now the mortgage started out at $1,145. All right, that might be high for some people, but it's going to actually increase now because we have this in here. All right, so now we add this in to that, and it actually becomes $1,185. So just know if there's no HOA fee, it's $11.45. Add anything into this area, and then now you have to increase your mortgage because it's going to increase now. And there's other things to know as well. As the home value increases, it's gonna increase here. That just means you have equity. You have $7,000 equity into your home, so that's a good thing. But as the home value increases from 200 to more, your home insurance may increase. Your property tax will increase for sure. But the home insurance needs to take care of the price of the home. The home is no longer $200,000, so it's going to increase. All right. So on this right here, just this loan with the 4.25. So we had either a fair or a poor credit. The interest rate, the interest that you're going to be paying on that is pretty hefty. So $6.83 and 54 cents. That's how much interest you pay on that literally in the first payment. Now, this number goes down each time you make a payment. It does go down, but it takes a long time for this number to really reach zero. That's 30 years before it even reaches zero. All right. So it does go down to like 60, 70, 80 bucks. But now you're looking at like 20, 24, 25, 26 years. So you got a long time of paying a lot of interest just on that. Like, this is more than half of that. So you're paying a hefty amount. So now, if we're looking at these as for fair and poor, fair stops at $6.99. That's the highest it can go. To hit the next to hit the next bracket, you need to be at 700. So that's a good score. So let's say you're eager to purchase a home and you do it at $6.99. This is where you're going to be. Well, not where you're going to be, but let's say you'll fall here. But if you can wait a month, a week, whatever the lender tells you to increase your score. Maybe you got to pay off something. Maybe you got to have a couple more payments or increase your credit limit or whatever the case may be. Let's say now you've done it and it increased to like a 710, 720. Now you fall under the good category. You went from a 4.25 to a 3.25. Let's check it out. So now your mortgage payment is going to be $1,035. All right. So now the mortgage payment went from $1,145 to $1,035. Now you're saving $110 just right off the bat. So now let's look at what your principal and interest is going to be. $839 is your principal and interest. All right. And then the homeowner's insurance is still going to be 68 bucks. So we're the same. So we feel slightly equal, but man, it's $110 difference right there. And then we have property tax. Your property tax, again, I said it goes based off of the home value. It doesn't go based off of your income. It doesn't go based off of your credit score. It doesn't do that. So now you have your HOA fees. If you were to add in, again, $40 of HOA, it's going to be $1,075. That $1,075 is still lower than it's $1,145. With the HOA fees, you're at $1,185. So you're still lower at $1,075 than this one right here without HOAs. So just know that's the whole difference. So that will change depending on what you have to pay. If you have to pay $200, $300, $400 a month, whatever the case may be for your HOA, you're going to put that in there. Okay. So factor that into that price, the total price, but you see the difference now. Now you're in that good, right? So what do you have to pay for interest? Interest wise, you're paying $522.71. So it went from $683.54 to $522.71. Do you see how dramatic that is when it comes to having to pay a different interest rate and falling into a different category? Okay. So now let's say we're in a situation again. I've always got to play, good and bad. We're falling into a situation again where you're 759. So you fall into this category. You still like it. You're not falling into this category. You're not going any higher. You're not, being denied for loans, things like that. But you want to try to see, let me qualify for the best of the best. I want to see how the millionaires and whatever else, what rates are they getting? People with the 800 credit score, what are they getting? But your credit score was 759, so you fell under here. The lender again says, let's wait. You're literally inches away from being an excellent credit score. At that point, I can give you the best rates, okay? So now you wait a week, 2 weeks, a month, 2 months, whatever the case may be. Time is very important when it comes to this because you need the time to be able to increase that credit score. So take that time sometimes if you have the availability to do so. If you don't, then that's fine. You just do here. There's options to where you can buy down your points and get it down to here. That gets costly and you have to ask the lender what it is because it's going to change per lender. It's going to change per day, per hour, whatever the case may be. But you've done whatever you needed to do to grind it out. You said, I'm not paying 522 in interest. It's not happening. I can't do it. I want to have a 2.25 or the best score you can give me. So now you've increased your credit score. Let's say you just have an 800 because now you got to hit it at the dang ballpark. 850 is max, but let's say you have an 800, okay? Anything 760 and above, you're golden. You can have 760 exactly. You're going to get the same thing as that 800. So with that, let's go ahead and see what your payments are going to be. We've already seen 1145 for the 4.25 interest rate, okay? We've already seen a 3.25 interest rate. You're paying 1035. So now let's see what your mortgage is going to be. And of course the pen doesn't want to come in dark because the number's too cool. So now you're looking at a 933. Look at that difference. That's crazy. That's $212 difference. So why not? If you can do the $212 difference, if you can pay this amount on this kind of loan, you're going to pay your home off so quick. That'd be something different. I got to do a different video for all of that. But now let's look at your interest. Okay. So principal and interest on a 2.5% loan is going to be $737. Okay. So now you see the difference. It's just literally just dropping. It's about $100 difference, $200 difference. Now you're just saving. So this one, I already said it's going to be $68 because it goes off of the home value. The property tax, still the same. It's not going to change. It goes off of the home value. Now, let's look at HOA. Let's just go ahead and put $40 in here. Even if you do $40 on this kind of loan, on a 2.5%, you're only looking at $973. $973 is still way better than 3.25. It's still way better than the 4.25. You're literally maximizing yourself to the best. If you're able to wait until you get an excellent credit score, please do so. If you're not, maximize yourself to the best of your ability to be able to get to the next bracket or a bracket that's going to help you best. There's always options of like refinancing and things like that. But even still, you don't want to be in this credit score, refinance in this credit score. You don't want to be in this credit score, refinance in this credit score, or this one. You want to be, if you're in this one, refinance in this one. If you're in this one, refinance in this one. If you're in this one, refinance in that one. If you're in this one, refinance in that one. Like you want to be stepping up. Excellent. You can't step up, but you're going to be there. Let's look at how much interest you're going to pay on a $200,000 loan, $7,000 down, or excuse me, home value, and 193,000 loan amount. Let's look at what your interest payment will be at that point. So it's $361.88. Let me make sure you can see that one. This one is huge, man. Huge. $361. Folks, this is the same exact loan. All right. Same exact amount, 200,000. So you're telling me Joe Blow that has an excellent credit score is better than this Joe Blow who doesn't have an excellent credit score, is better than this Joe Blow, but the loan is still the same. 200,000 home value, $7,000 down payment. We're both putting down, well, all three of us are putting down 3.5%, but you're telling me this person gets better than me just because of a credit score. This is how important your credit score is, and that's how important the interest rate is when it comes to making payments. You can be saving $212 by increasing your credit score to something that's more in the excellent category. You can be saving so much in interest, you would have to look at the amortization schedule in order to see how much interest you pay. But there's people that pay literally a whole nother house for this thing. So it's a $200,000 loan, but say they pay maybe $480,000 for the home. Maybe say this one, it's not 480, but maybe it's 362,000. Maybe this one right here, all they're paying is like 80,000 to 140,000. But if you were to make these payments on this home, you may not even pay that extra 140,000. You're going to have this home paid off quickly. But do you now see the flexibility that you'll create if you take your time, improve your credit, do what you need to do with your credit scores in order for you to get the best? So I hope this helped. It definitely helped me when I looked at it in this manner. I'm going on my second home. Well, I have my second home, sorry. Going on a third home, hopefully sometime in the next year. But I've literally started down here. I started with a 480 credit score and paid $8,000 for a car. And the car was $12,000 and I owed $18,000. Like, does that make sense? It doesn't. But I did what I had to do. Move myself up and move myself up. So when I purchased a home, I want to say I was here when I purchased the first home. So now my credit score is not excellent, but it was here. I fell into the 750, 759 area. Do I get the excellent? No, I don't. But I'm creeping my way up there. So anything I do next is literally going to put me into that excellent category so I can open up a lot of opportunities and get myself into the best advantage. But as always, man, if you've made it this far, hit the like button. Please share, please subscribe, and then put Shamrock down at the bottom. And if you've learned something today, please comment down below. Maybe you can comment down below with your interest rate or what interest rate you like best. As always, man, I love you guys, and please join me with the next videos.